Hi
Hi
everyone,
everyone,
welcome
welcome
back.
back to Infinity Wealth.
How are we
All
all?
right, my young Padawan, how are you?
I'm good. I'm good. You tell me
Okay,
how
hold on.
you got to get glasses. Oh, I love it. We got the same haircut, and now we got
Yeah,
both glasses. Look, you see, it's the
well, I'm following after your good looks, mate. So
trend. I
try
know,
try my best. Yeah.
keeping up with the swag.
There you go, there you go. So I'm going to take my glasses. These are my reading glasses, but I have actually got other glasses as well. So there you go.
No, also, all sounds good. Well, we got a
We got a
episode,
packed show for you, man. Packed show,
big show. We got
packed
so
show.
much. We're
Yeah.
actually gonna be talking about the all trending NFTs first and foremost, which is what's going to be most probably the hottest topic that a lot of people are trying to figure out and find out more information about. But we're also going to be discussing a lot about property, bond yields, a lot what's happening in the market, and some of the trends that me and Martin are really spotting, especially with patterns and things and behaviors in crypto space and everything, and how it's all joining together. So we're going to be discussing all of that, Martin. And
Hey, do you remember the film The Highlander?
I haven't seen it. No, I've never seen The Highlander. No,
Okay, no, it's The Gathering.
A Gathering.
Oh yeah, only if you're a Highlander fan or you've
Right.
seen the film. Yeah,
You'll understand.
it's called The
Fair
Gathering.
enough.
Yeah, it's fine. It's fine.
Fair enough. I'll look up the reference after. But yeah,
Yeah, you do.
a gathering as
Yeah, well,
Martin.
you've taken the tea cozy off, which is good.
Yeah. I've taken a tea cozy. I mean, it's quite the weather's not been nice today. It's been
Yeah, actually, the weather's really good. Yeah. Weather's been really good.
Yeah, awesome, cool. So let's get into it. I'm excited for this episode.
Okay.
I think
Yeah.
we'll get
You're
started.
going to learn a lot. You guys are going to learn a hell of a lot. So just stay tuned throughout the whole thing.
Get your notes out, get your pens out, because you're going to need to be taking some notes and stuff.
And I'm going to give you some targets as well and some indices. Right?
Oh wow, I'm excited for that.
Yeah.
Cool. So before we get into it, obviously the normal drill, make sure you like and subscribe. And if you don't smash the like button on this video, you're not going to see our videos pop up in your feed, which means you're going to miss relevant content, which is relevant to when we're speaking about them. And also, if you're new here, welcome. We talk a lot about building wealth, building infinite wealth. So you're going to get a good gist of all the things that we speak about in this channel. So yeah, but awesome. Thank you so much for joining, and I hope you enjoy this episode. But apart from that, let's get into it. So I'm going to start first and foremost, Martin, with talking about NFTs. The hot topic, the hot trend that's going around, and I'm sure people have come across a few interesting things that have happened in this space. But just to sort of introduce what NFTs are to people, if there is anybody that hasn't heard of it or come across it, I don't know how, but if you haven't, NFT stands for a non-fungible token. It's something that's not only been trending, but something that's been around for a while, since 2017, where they didn't really necessarily take off. But it's essentially a digital token, like a cryptocurrency, right? Like Bitcoin or Ethereum, and it runs off the Ethereum blockchain specifically. But the difference between like Ethereum or Bitcoin is that NFTs are quite unique, and they can't really be exchanged for like a like for like, hence meaning non-fungible. So NFT, non-fungible token. Fungible is basically mutually interchangeable, like fiat currency, for example, right? Whereas NFTs aren't like that. Now, there's different types of NFTs. They're most commonly at the moment taking the form of things like digital art, music files, any sort of digital files that you can essentially hold. Anything unique that can be stored digitally and holds value, basically. In layman's term, basically, they are like another physical collector's item. So, but instead of getting a physical thing, you get a digital file, and it's one of a kind. So there's no copies. The copies don't hold value. If there is copies, the copies won't hold value. So the same principle of being that one and only holder of an art piece or anything of that nature, basically. So you can't just download a copy of one of these NFTs or whatever it's art and be like, think you've earned millions. It doesn't work like that, because the information is actually stored on the Ethereum blockchain. That is what actually holds the value of the person that holds it, basically. So yeah, that is NFTs in a nutshell. And is it here to stay is a lot of the question that I've been hearing. I personally think it is, and I personally think it's a part of this process that we're seeing in terms of the blockchain technology, right? The decentralizing, the different ways of how we're seeing our day-to-day activities, such as buying valuable art and buying whatever it is that holds value, being processed on these blockchain technologies. So I do think it's here to stay, but I do think it's a massive bubble that is literally going to pop. Just like the internet at the beginning, the dot-coms, right? It was not to say that internet is not here to stay, but what happens at the beginning is always what you want to be very cautious of. And I think that's what we're going to be talking more about, Martin, because it sounds all juicy. And there's been artists that, like the Beeple artist that sold his
62 million.
Ridiculous.
62 million on a digital platform update. But before then, that blew away all records. But before then, there's tons that were sold at 30 million, 23 million. There was tons, absolutely tons.
Yeah.
But just going back to NFTs. So Kiki's done a good intro into what NFTs are. But anyone can get into NFTs. Now, the main thing about cryptocurrency was that it was a decentralized system, right? The advantage with NFTs, and this is what they're saying, is that you can control it. So if you're an artist, a recording artist, for example, you can record your music onto an NFT file, right? People can buy sections of that NFT file. So as a musician or an artist, normally, you went to the record companies, and the record companies then took vast majority of the income and then just gave you a little bit of the royalty. It turns this whole thing around, right? So this is where the advantage will come in the long run. Okay, in the long run, you have to remember that. So what you got as an artist, you can produce your music as an NFT. If people like it, they can then actually, and it has to be original, all right? Something that you have to remember, it has to be original, right? So original, your own work, whether you're an artist or, you've got a music file. And then what you do is people like your music, they can actually pay to actually have royalties in your music, right? But you still retain the rights to that piece of music. Whereas if you were, if you're being signed up by a record company, the record company will then actually say, well, the royalties belong to us, the rights belong to us. We just give you the royalties. It doesn't work that way. It flips it around, which is why it's more of a decentralized type system, right? So that's something that people have to realize. Now, lots of people have been getting into NFTs. Anyone can produce an NFT. But the art is that most people are paying bonkers money for NFTs produced by people that are well known, right? So classic example is the owner, I've forgotten his name now, Twitter. What's his name again? I've forgotten his name now.
Oh yeah, Mark? No, is it Mark? No.
I've forgotten his name. He's the hippie anyway, right?
Yeah.
But he produced an NFT of his first ever tweet. 2.3 million was the bid. 2.3 million, right? So it has gone a little bit bonkers out there. People who've made lots of money on Bitcoin and all the cryptocurrencies are now saying, well, actually that's quite good, I'm going to hop into it now. So they are doing that. But I think the technology that NFTs supply, just like Bitcoin, where it was a decentralized system, I think could work in the future. Whether NFTs are viable or not, that's down to the person who's buying them, right? Something only has value if someone is prepared to pay you that value.
Yeah, exactly.
Right? When someone has that, so if everyone is into it, then obviously it has that value, right? But as soon as the veil is lifted and everyone suddenly realizes, well, actually that's, would I actually buy a Mona Lisa painting or would I buy an NFT? I have a simple answer to that. I'll buy a Mona Lisa painting for 63 million, whatever million, and hang it on my wall rather than buying an NFT, right? But yeah, so it very much depends on who you are as an individual, what you value, and whether someone else then is prepared to pay more for it. So that's what NFTs are doing. So on certain platforms, when you create an NFT, is pretty easy to create. There are platforms that enable you to create an NFT, right? They normally charge you a fee. You have to have an Ethereum wallet, right? You have to have an Ethereum wallet, and the payment is done via Ethereum to the exchange that creates that NFT. So it could be a grift file, it could be a music file, any file, right? And it's then put into a tokenized by the platform, and then it's actually sold onto the platform, then put onto the platform. Now, there are various platforms. There are some very good platforms that you can only be invited on that platform. You can't just go on there and say, well, I'm going to stick my NFT on there. Those are the platforms that command far more money, right? And you have to be invited onto that platform. A little bit like Clubhouse, right? You have to be invited onto that platform, right? And obviously you will have a greater chance of a greater price appreciation on that platform than some of the other platforms. But invariably there is a fee to pay when you tokenize it. And the fee can be anything from $80 to $100. And that's how these guys make money. And then it's a case of, if you're a well-known artist, they'll go, oh, yeah, I like it. Or they may even like a section of your music. So I've actually got a couple of friends who I've said to them, listen, you should be getting into this. You're a musician, get into this, create it, NFT. Maybe someone will like it. Maybe someone will, want to play it somewhere, right? It's a small price to pay. It's like going into a recording studio, but it's a small price to pay. Maybe people can just buy the rights to that NFT as well. Sorry, you retain the rights, but they have the rights for that copy, right? You retain the original one. So yeah, there's various ways of doing it. Huge, absolutely huge, right? Massive, absolutely massive. Whether it will carry on or not, I don't know. But it also got me thinking. It also got me thinking, Kiki. Are we in a
100%? I mean, this is what this is what the obviously, like, there's always going to be people, especially I found in this, because I'm in this space, the creative space. So NFTs are hugely spoken about at the moment and very trendy. But I see a lot of very unconscious, or not unconscious, I would say more uneducated or not understanding much about how these markets will work, sort of behavior. And this is because, especially from the creative space, they have no clue in terms of how these sort of things work in terms of the bubbles and stuff. So obviously, like where there's opportunity there's always, especially in this case, there's always risk, like if we're talking about early adopters of cryptos and Bitcoin, if you bought Bitcoin at the first wave when it went up to 10,000, 11,000, and you bought it at that peak, and and after that crash, you got your fingers burnt. So I think the other thing actually that was intriguing is that a lot it's obviously because it's run on such a network like the Ethereum blockchain. It's hugely energy, like it's not efficient at all. A lot of energy consumption. So there's some data I don't specifically know, but like producing one NFT token is like equal to like nearly providing electricity for a town or something in terms of
that's Bitcoin, Kiki. That's Bitcoin.
Right. No. So there was something. What I'm saying is there was something in comparison to that in terms of the NFT.
Okay. Yeah.
So in terms of what the energy impact is, but there are also ways now that people are finding to be as carbon neutral as possible as well to produce these NFTs. So there's a lot of implications and a lot of solutions to those implications. But like you said, the way it's behaving at the moment is very interesting to see what is happening in terms of the bubble perspective. So definitely, I definitely agree.
I mean, you're right. You talk about early investors into Bitcoin and things like that. These guys, there's lots of people that have made a huge amount of money on Bitcoin and cryptocurrencies. Kudos to you guys, right? Absolutely mammoth. But these are the guys that are also going into NFTs, going, well, actually, that might be worth that. It's unique, right? The thing is, it's unique. It's a unique token. So maybe that's worth quite a bit of money. But my point is that it's worth a bit of money only if someone's prepared to buy it off you.
Yeah, exactly.
Right? So if you're looking at NFTs, you're looking at trading NFTs and buying and selling NFTs. I would say just be very wary, right? Creating NFTs to make an income, bang on, try it out. Why not, right? Why not? But if you're looking to buy it, hold it, and in the hope that someone will then pay you a little bit more money, there are exchanges where you can see the price has always been negotiated, so the people are trading, right? All it needs is one news story saying, actually unveiling the fact that it is something that's digitized. It has no value, as in the value is only put on by people who are buying it. If they stop buying it, it has no value, right? And one of the things that I wanted to convey was, there was a good argument made for NFTs when someone said, well, actually, what's the point of an NFT? And they came back and said, well, actually, Andy Warhol put a sheep in a preservative and sold it for millions, basically. Is that art, right? So art is in the eye of the beholder. Yeah, exactly. But that beholder was able to actually take that piece of art and put it somewhere on display, right? Where an NFT can only be displayed on a screen, right? On something like that. So whether it will carry on, I'm not sure. I think the main problem that we have now is that a lot of sports stars, a lot of people and celebrities have got onto the bandwagon to try and make a quick buck. And it's to really rob the uneducated investor. So I would say to you, if you've got millions to spend, there are collectors, artwork and stuff like that. That is a Picasso is a one-off, right? A Monet is a one-off. A Van Gogh is a one-off. But an NFT just seems. I know we're digitizing it all, right? I think it's good for artists, musicians, and people like that, and I'm sure it will find other applications as well. But for those people that are jumping on a bandwagon, making a simple grift file of a cat, right? So there's cat grifts as well, which people are putting as NFTs and people are buying and selling them, created by someone in the know in the industry. I don't know. I would just say use common sense in certain examples, right? Use common sense. But it brings us onto Bitcoin. Right. And I think, one of the things that I've been noticing in Bitcoin is when it hit 60,000, there was a lot of sellers in Bitcoin. Now, remember, sometimes you can do the pump and dump, right? You can do the pump and dump. Yeah. And it just seems as if there's a bit of pump being put on right now and a bit of dumping going on, especially in Bitcoin. Bitcoin hasn't, it hit over 60 twice. It didn't hold the price. It came straight back down. So I wouldn't be surprised to see a larger correction in Bitcoin. And a lot of the investors who've made a huge amount of money are now just piling out of it, but you hear of institutions buying it, institutions selling it, and I'm thinking, okay, well, right, why are you publicizing it now when the event's already happened, So I would just say to people, just be wary, look at the charts. Bitcoin, I'm not saying Bitcoin is, not here to stay, but what I would like people to start thinking about is the amount. You've heard it already, right? So I tried to put a puzzle piece together in my head and think risk, profit, right? One of the things that I think about is you've talked about energy consumption. Right? You've talked about energy consumption and how much energy is required for Bitcoin to produce a Bitcoin and mining Bitcoin. The next thing is you have to think about is governments, especially in the US, are all talking about green environment, saving energy and everything else, right? Put that in your mind as well. The other thing that you have to think about is they're all talking about their own form of digital currency. Right? The other thing that you have to think about is they do not, although Bitcoin is a decentralized system, they do not want to lose control over their own stupid fiat currency. They do not want to lose it. There is nothing stopping a government. India already came out, which is why Bitcoin took that massive crash down to by 15-20%, because India came out and banned Bitcoin. Right? They banned Bitcoin. There is nothing to stop government saying, well, actually, we see it as a danger to our own fiat currency, so therefore we're going to ban it. Right?
Illegal.
If it bans it, you've got a piece of code on your stick which you may not be able to get rid of. Right? So you've got to have these sort of things. So if you look at where the stars are aligning, you look at, Janet Yellen already said she does not like Bitcoin, right? She doesn't agree with Bitcoin. She is part of the Treasury. They do not want to lose control of the dollar and stuff like that. So this and Biden also saying about green energy, stuff like that. So they could easily come out and say, well, actually, we think you should not be buying Bitcoin because of the amount of energy it's used. But we've created our own digital currency, which is not centralized at all. It's to rob us blind. Right. But you've got to be mindful of that, right? That's one thing that you've got to be mindful of. And looking at the Bitcoin chart, it's not looking too healthy to me at the moment. You know, so I would just say be mindful of it and just monitor it, right? You know that when Bitcoin starts making a move, it makes big moves. So jump onto those moves, basically. You may not want to short it. That's great, but look onto the moves. But there's a lot of stuff that's going on at the moment. Ethereum took off mainly because of NFTs. NFTs took off. So Ethereum really had a massive boost. Same with some of the altcoins as well. Again, all the same. They're all traded. Yeah, they're all constantly traded. So just be mindful of that, everyone.
Some good points, some really, really good points, actually. I think especially the point of like what India did. It's doable elsewhere. It's a very, very good point. But 100%. I completely agree. And it's absolutely like what I find quite intriguing, actually, Martin, is how everything is essentially in the world of wealth and in the world of whether it's not falsely created but all of a sudden created wealth, and also the actual the hard wealth, the ones that we've been using for a long time. How these worlds, and especially more the digital world, is immensely increasing at a pace that it's almost most people can't keep up with. If you got to think of it from this perspective, right? So people like the Ftse, people like the authorities, the governments, right? They're just about getting the right people in their house, in their organizations to get their head around cryptocurrencies. Now you've got NFTs and all these other different technologies that will be going ahead, right? So it endangers, essentially, in their eyes, at the speed at which these things are progressing. So just adding on to your point, the point that could potentially happen, and I would not doubt if it's ever will be a conversation that has been had by international governments, right?
Bitcoin could go to zero. Remember that. If governments around the world all join together and say we're banning Bitcoin, it goes to zero. They could say, well, we think Bitcoin is used for money laundering purposes, so we're going to ban it. So you've got to be mindful of that. All right. You've got to be mindful of that. But the next thing that I wanted to talk about really also relates to the stock market, right? So you've been seeing the stock market actually taking a bit of a corrective dive. And then now, the NASDAQ is up huge. It's up over 2% now as well. All the tech industry is coming back up again. But, when you look at cycles and you look at how far we've come, that I'm not calling a top to anything or anything else like that, but I'm saying that we could be due, maybe not, we could soon be due for a pretty meaningful correction. And the reason for that correction is, bond yields have been rising, which is why, the NASDAQ has been coming down, and I think it's good to explain to people, because a lot of the viewers may not know what bond yields are or anything else, right? So let me start off basic to try and explain to you in layman terms, right? A bond is something that a person buys and they are paid interest on, right? So if I issue a bond, I say, lend me £10,000 and you can have this bond, or you can buy as many bonds as you want, but each of those coupons will pay you 2% interest or 3%. And as interest rates drop, that the value of that bond actually goes up. Yeah. As interest rates rise, the value of that bond drops. Now, the biggest bubble in history that we've ever had right now is the bond market. So the best way to explain it to people is, if you look over the last 30 or 40 years, interest rates, all they've been doing is falling. The peak, the fall, the peak, the fall, right? And that's been going on for such a long time, which is what has driven up asset prices, right? Asset prices are driven up because people are hunting for yields, right? They're constantly hunting for yields, saying, well, the money's in the bank and it's not paying me enough in the bank, so I want to try and get a better return for my money. So they've been going into property, they've been going to stocks and shares. That's fine. As soon as bond yields started to rise, the NASDAQ started taking a wobble, because tech shares are highly valued, right? They're highly valued. So any rise in bond yields affects them tremendously. Now, having said that, that effect is tapering off, and there seems to be some sort of stabilization. What you'll find is it will stabilize, and bond yields take the next jump. Bond yields have been oversold at the moment. They lie in oversold territory, right? So it means that they're due for a good corrective bounce up again, right? Once they've finished that corrective bounce up, they'll probably swing back down again, right? And there is call that bond yields will rise over 2%. If it rises over 2%, it will affect the overall stock market, because people are saying, well, actually, I can get a 2% yield on something which is low risk than doing it. Now, there is another, if people have never heard of Ray Dalio, please look him up. Great guy, very smart investor, made billions, right? He is actually calling that, he's actually saying, well, there are a couple of videos where Ray Dalio is saying, well, it seems like we're towards the end of a cycle rather than the beginning of a cycle, mainly how the market is behaving and how human behavior is working at the moment, right? So it seems very end cycle game rather than beginning cycle game, right? So one of the things that he talks about is with bond yields rise when, let's say, people have heard about QE, right? So what happens in QE is the government actually go in and buy bonds. So they can buy their own bonds, or they could buy bonds that are held by banks, right? When they buy the bond, they're actually taking possession of that. Now, central banks around the world are becoming the lenders of last resort. They always have been. But the other thing that this is doing to central banks is that they're owning all the assets. So best way to give you an example, if you're a complete layman, say you've got a 70% mortgage, right? Or 75% mortgage. We talk about property now. Say you've got a 75% mortgage. That mortgage sits with your lender, and you pay your lender interest on that. Now, that particular vehicle, that bond that they've created, can be sold on to someone else. Yeah, that can be sold on to someone else. Although you think you own the property, don't forget, 70% of that property is owned by your lender.
Yeah, exactly.
People forget that, right? And there's loads of guys going, well, I'm a multi-millionaire, but they're not. Unless they own it outright, you're not, right? It's all leveraged loan, right? It's all leveraged loan. So what you then have to work out is, okay, if people lose faith in the government, they will be forced to pay a higher coupon on a bond yield. Now, the worst thing that I see right now in the property market, in the overall market, is that junk bond yield. So would you actually lend money to someone who is not financially stable?
No. Yeah.
4%.
Yeah, exactly.
At 4%.
Yeah.
So junk bond yields have been driven down so low It's just bizarre because of the amount of money out there, because of the amount of liquidity out there, right? They've been driven down to these stupid valuations or prices, basically. And it's pretty dangerous. You know, you shouldn't be buying junk bonds. And these are companies that are, you know, issuing bonds that are not financially secure, right? And people are still going out and buying it. So I'm not saying that, you know, this merry-go-round. The other thing that you've got to remember is that the whole structure is held in place by the central government. Now, when they're buying bonds, they're helping to keep the interest rates lower.
Yeah.
But they're actually acquiring the asset.
Yeah, exactly.
They're actually becoming wealthier by acquiring 70% of my mortgage, right? If they bought that mortgage, right? So I have to pay them. If the market crashes, they can take possession of it, right? So this is where the whole central banking system, which is why I like Bitcoin and I like crypto, it's all screwed up.
Yeah,
Right?
it's all over the place.
It's all over the place. It's screwed up. There is no natural market. It's all manipulated. And there will be a time and a reckoning of people saying, well, that's enough because what you're doing is absolutely stupid, right? We don't know when that is, but, you know, I've done lots of calculations. So in property, what I would say to people is, look, I was around in 2007. I was around in 2000 as well. What I noticed was property prices just went rocketing up, right? Classic example is 2007, 2008. Property prices went exponential in auctions and stuff like that. And then within a year, they were collapsing. We seem to be in that phase right now where property prices are just going completely doolally, right? And not around it. Again, it's what a person is prepared to pay, right? They've gone higher because in UK, governments have actually, the loan values basically have gone up. You can do 95 to 5% loan if you're a newbie, right? If you're a landlord, it's still pretty tough. It's still 75%. Although they are doing 90% at the moment. Some of the banks, right? But at the end of the day, you know, you don't want to be buying. I know property is a long-term game, right? But when the economy now begins to open up, you'll find that businesses start to fold because, you know, at the moment they're being kept afloat by all the money. So you've got to be mindful of there will be some sort of correction, right? Property's had a big boom. It hasn't had we haven't had a correction since 2009. Yeah, a viable correction. Right, we've got if you look at Rightmove, you'll hear that, you know, we went up 6% last year in December alone. We're up this year as well, and the main factor, the reason why, is because of COVID, people didn't put their houses on market, so there was a shortage of stock. People didn't bring stock to the market. So as soon as stock starts hitting the market, then that's what will make a difference. And if bond yields start rising and people start getting nervous about lending money, that's when it will make a big difference, right? Yeah,
exactly.
So in property, just be careful, right? You know, if you want to reach out to us, that's great. But no matter where you are in the world, property prices, you know, if you look at lumber prices, they've gone up. Copper prices, they've gone up. So inflation is there. The cost of things is there. Bricks, the price of bricks has gone up because of Brexit. Price of plaster has gone up because of Brexit, right? And it's forcing everything in higher and higher inflation. Now, whether, you know, there's two schools of thought. That one school of thought is that the Federal Reserve will be forced to step in and do something called yield curve control, right? What that is they go out and buy bonds, long dated bonds, to keep the interest rates lower, right? And they sell the short dated ones, which is not great for banks, right? Which is not great for banks. But if you look at things like banks, they've gone up tremendously, right? And now is probably not the time to buy banks. You've probably missed that cycle, right? Missed that cycle. Now we're approaching a time where you're going to do more it's more of a stock pickers market rather than buying an index and stuff like that. So looking at solid companies with solid balance sheets that have a long-term outlook, those are the ones to buy. Yeah, those are the ones to buy. And staying away from some of the other ones. So we look at, the other thing is, I don't know if you've been reading in the market on electric cars are great for the environment as far as pollution is concerned, but on the other side, in order to make the raw materials like lithium, cobalt, they're mining everywhere and polluting the whole atmosphere. They're massive amount of pollution. So it's not really non-polluting. Right?
Exactly. It's the process which has to be assessed as well.
Exactly. How is your electricity produced to power up that car? Is it a coal power gas station? A coal-fired gas station, or is it solar panels, which is different? If it's renewable energy, it's completely different. Right?
Yeah, exactly.
So that's something that we all have to be mindful of, and then, sorry if I'm talking too much, right?
No.
One of the things that I have been looking at, is I look at long-term cycles. There's a couple of guys that I follow on long-term cycles, right? With the NASDAQ moving down, it has, as long as it doesn't break its other all-time high now, we're in a corrective phase up, right? We're in a corrective phase up. The Russell 2000 has already hit the target value. I mean, it's gone up ridiculous amount, right? It's already hit the target value. It's beginning to come up. The Dow, I would say to you, the NASDAQ, you're probably looking at 1,300 on the NDX, right? Which is the platform that's the futures and continuous prices of the NASDAQ, right? I think, if it reaches 1,380, anything from 1,300 to 13,600 to 13,800. That I would not be a buyer at those sort of levels. I'll be more of a seller at those levels, right? With the Dow, I'm looking at 34,000. I would be a seller of the Dow at 34,000, right? S&P, you're looking at maybe 4,100, 4,200, that sort of mark. But again, the year-end targets were around 4,000, but they've been increased. Now, the S&P also has a lot of bank stocks in it, but it's mainly tech that's driving it up at the moment.
Yeah, it is mainly tech. Hugely.
Yeah, so, and the Ftse 100, again, I've always felt the Ftse 100 has been undervalued. But if you look at the Ftse 100, because it's got a lot of miners in it, as well as banks, it's a pretty good index for long term and interest and stuff like that. But if you start looking at companies like AstraZeneca, you start looking at Smith & Glaxo, they seem to have bottomed out. And these are good dividend paying companies. And you tend to find, utility, when you start noticing utilities going up in price, there is a movement away from risk assets to safe havens. Right? The dollar moving up is basically showing risk off rather than risk on. Right? And if you look at, people have been talking about inflation. Well, if inflation was around, how come gold is not up? I mean, I know it's manipulated. And I believe in and I believe in gold and silver, but holding the physical asset rather than the paper asset, because the paper asset is manipulated.
Exactly, 100%.
Yeah, and the other thing is, I don't know if you've read that, they're talking about a short squeeze in silver may be occurring. That's because there's a lot of, if you go and try and buy physical silver and physical gold, it will take you a long time. They'll collect your money and then they eventually send it to you. Now, the reason why is because there's a shortage in the market. Now, we both know if there's a shortage in the market and there's demand, prices should be going up. They shouldn't be going down. Right? They should be going up.
Complete opposite of nature. Complete opposite of
and that's because our mate, JP Dimond, right? Our mate JP Dimond and his crew basically I've always been shorting gold and I've always been shorting silver. Now, COMEX is an exchange that deals with this sort of thing. There is a shortage. There are people with open contracts, full contracts, and they're not going to sell the silver contract, which would mean that if that's the case, then silver prices are going to rise pretty rapidly.
Yeah, exactly.
Now,
exactly.
So I would say to people, keep an eye on silver.
Yeah.
You don't have to go and buy it now. And I'm talking about, you can buy the physical stuff if you want, but I trade both the physical and the paper, and the movement will be in the paper. Physical assets carrying a lot of premium at the moment because there's a shortage of it everywhere, right? So if the paper price on the platform silver, you start seeing it creep up, you saw what happened to GameStop, this will do the same. Get on board, get on board. Even if it's paper that time, they've lost control of it, and they'll have to actually push up the prices to force people to sell their contracts.
Exactly.
Contracts to sell them. Right. So that's something I would say to people. Just be wary of that. Be mindful of that. Be mindful of opportunities that are around.
Yeah, exactly.
And I think since we spoke, oil took a dramatic gap down,
oil was very interesting. Very.
It took a dramatic gap down. Again, it is coming back up. Oil's coming back up. But all these prices are related to the dollar. Related
exactly.
To dollar.
Exactly.
So I mean, oil is beginning to creep back up again. So it's trending higher. As long as it makes a higher high and not a higher low, basically, it's worthwhile considering it, basically.
Yeah, exactly. 100%.
So what else have you been looking at? I'm just going to have a flick of my screen here to see.
Sure. No, I mean, obviously, a lot of what you covered there, so much value and information. Like I was saying, I hope you guys have got your notebooks out because you need it. So we gave you a warning at the beginning that you definitely need it. But it's very. I've been very observant. If anything, I think the last 6 months I've been both fairly heavily investing in a lot of stocks as we've been talking about it and posting videos on it as and when we have. But also observing as well is the market conditions. And obviously, I'm not as fortunate as to have as much experience as you and foreseeing already what has happened in the markets previously. But off of having conversations with you and obviously reading and studying a lot, I understand what market behaviors there were previously, which are in a weird way being delayed of what really should happen with basic economic principles, just like literally we're talking about gold and silver right now, right? With the shortages and basic economics will teach you that, it's simple. If there's a shortage in supply, then the price goes up. So
it should go up.
Yeah, exactly. Which obviously defies all of these basic principles that we're talking about. So I've been very observant and trying to figure out and sort of understanding this manipulation, and first and foremost not understanding it was manipulation first, but then coming around to the head of it and realizing what it was. So whatever market we're looking at now, obviously we've been saying this for weeks and weeks now, obviously the crypto space and obviously now NFTs as well are very much taking a lot of the limelight. And I'm 100% sure, people that would have on a normal day, even if it was paper gold or paper silver, would have invested in that, are now taking their chances with cryptos because it's becoming obviously the trend. I would say, I'm actually very conscious at the moment in terms of what I'm investing in as before. I'm very, if anything, timing or if something seems like a good price or a good level, only then am I buying it. So I haven't been as heavy as I was in the last 6 months. I haven't been as heavy maybe the last month or two, whatever. So, and for right reasons, what we've been discussing, what we've been seeing. So that's really on my side in terms of what I'm specifically looking at and the way I see things behaving and the way I am sort of reacting to that. And it's an interesting world, Martin. It's really,
I tell you what, Kiki, it is such an interesting world, right?
Yeah.
Because it's human psychology, right now, the Americans have had a lot of stimulus checks, right? So they're all piling in. And invariably, the banks love to steal our money, right? So that, I'm sure that there's a shorting opportunity around the corner that they'll just go, okay. So that today, I mean, you know, the VIX, when you look at the VIX, the VIX is down like 8% at the moment, 7.7% down, right? The VIX is a fear gauge, you know, and it also shows complacency.
Yeah,
right? When it hangs around for a long time, it shows complacency, right? Now, whether that complacency, you know, the other thing talking about the stock market is, you know, there's seasonality. So I want to tell people about seasonality, right?
That's a good point,
the stock market generally does pretty well in April. It does pretty badly in February and in March, and it does pretty well in April. And then sort of, you know, there is a term called sell in May, go away, right?
Yeah.
And what you tend to find is if the market's had a good old run, you know, there is a retracement in May. So I think, you know, over the summer, because the other thing you have to remember is the stock market is a forward-looking indicator. Okay, so things are opening up now. Okay, are they producing as much profit as what was anticipated? You know, the stock prices are actually higher now than they were during the before the pandemic, right? So they have to justify that valuation in that stock price, not just, well, we bought it because, you know, bond yields are so low.
Yeah.
Right? If bond yields rise, that justification goes out the window. It's more based on valuation. So there's a lot of very smart people who are calling a danger sign. I'm not saying it's the top now, but just keep it in the back of your mind that, you know, we are approaching I wouldn't say a major turning point, because no one knows if it's going to be a major turning point. But I would definitely say in the next 2 months, it could even be this week. I'll tell you why it could be this week as well. I'm not saying it will be, right? But this week, a year ago, is when we saw the stock market crash. So if you believe in a year cycle, this week was when the stock market tanked because of COVID, right? Because of COVID. Germany are going back into lockdown, yet we're still up. Right? So yeah, there's a lot of things floating around at the moment. There's a lot of balls up in the air at the moment. So I would say, you know, you wouldn't necessarily want to short the Russell. I don't like anyway, because it's very overvalued, because it's full of companies that are zombie companies, basically. They don't make any money, and they're being kept alive because of all the government loans. It's stupid, absolutely stupid.
That's also the most, I think for me personally, actually, is bringing back the government loans and the funding that's been keeping companies alive is the biggest thing for me at the moment. That for me is going to be the big, me personally, in my opinion, is going to be the big tick. You know, once a lot of these companies start to see full administrations and shutdowns and actual people from going from furlough to actually being unemployed, and you start to see that cycle start turning, then everything within everything sort of starts in tune with that. And I'm just talking about the UK, but once that starts in the US, you know,
I mean, this is the other thing that's bizarre, right? I don't know if you've been following. Do you read a lot about financial stuff?
Not as much now. I did quite a bit before. I'll be honest with you.
If you look at some of the financial media, right, they're all talking about a boom in the US. They're talking, it's a boom! Wow, things are going ballistic.
Recoveries,
with 10 million
high
people
all-time
unemployed.
highs.
With 10 million people unemployed, recovery. What planet are you on?
Yeah, exactly.
And do you think I'm stupid? Right? It's to try and make people feel good. Right? Try and make people feel good. So yeah, you know, we've just got to be mindful of that. But I would say, you know, here's a tip, and please, we're not giving financial advice or anything like that, right? Here's a good tip, right? If you wanted to short something, right? If the NASDAQ goes to 13,800, it's not far off its all-time high. If you short it there, you've got your risk to reward ratio is quite high, right? Because you can actually be stopped out. You can have it above there, let's say 3,000, 13,000 or 14,000. So you're losing 200 points for the sake of making a hell of a lot more. Right? So you that's where you have to think about it. With the Dow, the same sort of thing. You know, I've said to you 34,000 or thereabouts. You know, you could try shorting it there. and then see what happens with the Russell. The Russell is, I think the Russell needs to take a good correction at the moment, but it's not. It just keeps being held up by Cathy Wood.
Yeah,
Wood.
Good old Cathy.
Yeah. Hey, did you hear about the Tesla?
No, what?
So Cathy Wood thinks Tesla will go to 3,000.
Oh, now it's got a bit of a better chance.
3,000 from where it is now. It's madness, right? So she's going, she says, oh, worst case scenario, 2,000. Where do these people just pluck these numbers out of the air, you know?
It's Cathy Wood. It's Cathy Woods. You're forgetting that, Martin. It's not just this is the person. Don't forget.
Yeah. So, you know, Cathy Wood has been the darling of the tech sector and the high valuation stocks, basically.
Yeah.
And she's been pumping it. And she's obviously got a hell of a lot invested in Tesla. So it's in her own self-interest to make sure Tesla stays up.
Yeah,
but
exactly.
people buy it. You know, people go, oh, Cathy Wood said this, I'll go out and buy it, you know?
Yeah.
So they're going out and buying Tesla stock, you know, but at the end of the day, have you seen some of the EVs coming out?
From Tesla or from
from different companies. So
there's a lot. There's
some beautiful EVs coming out.
Some are really nice. I was looking at. Yeah.
And the Volkswagen i4, they've actually reduced the price of that.
Have you seen Audi?
The e-tron coupe looks beautiful, man. So you've got some really nice cars coming out now. Which will be interesting to see how that, you know, people have to just ask yourself, you know, I know people like Tesla. I know they like Elon Musk. He's a very smart guy. And I'm not knocking him for the slightest. He's a
but the other boys are starting to play now.
Right. But you know, there has to be some sort of reality check here.
I think that's a good point, because all the other players are starting to play ball now, and I was actually intrigued. You know that Toyota don't have an electric car, and they don't necessarily
hydrogen. They've been working on hydrogen.
Yeah, they've been working on hydrogen. They said they don't really have any plans.
Thing, by the way, that's the next big thing. Hydrogen cars.
Yeah. So they've gone two steps ahead, which I find quite intriguing. So the
Japanese have been working on that for a number of years, though.
Yeah, they want to look out for, because I was quite shocked that they actually, they seem to say they're skipping the whole electric vehicle step in itself. So
to produce their own fuel cell technology to create electricity.
Yeah, exactly.
Now that is brilliant.
Exactly.
Now that is brilliant, right? Yeah. So Honda are doing the same thing, and
Honda.
It's then just pumping water into the tank and having a fuel cell that produces hydrogen, basically.
Yeah, exactly.
For combustion.
Which is intriguing.
So it'll be interesting to see what Tesla does with all that.
Yeah.
But I'm not saying, I'm not knocking Tesla.
No, of course. Yeah.
Luxury cars, you know, if you look at Mercs, they're all beautiful cars. You know?
Agreed.
And then you've got to realize that, by the way, did you know that Tesla sales in Europe have fallen? You won't hear that.
In Europe, no.
Have fallen.
Okay.
Tesla sales in Europe have fallen. Right, have fallen, which is why they reduced their prices a little bit. They've fallen, right? And in the US, when BMW, Porsche are out there, BMW come out there, even the Skoda is a good car. There's a Skoda EV. I thought, it's sexy. It's really sexy, you know.
There is.
So it would just be interesting. We live in interesting times on far as valuations are concerned. It does look a bit frothy. But like I say, if you think it's frothy, don't necessarily short now, but short with the levels that I've just said to you. Have a look. If it goes beyond that level, then close out the shorts. And we were wrong.
Yeah, exactly. Obviously, like just being the mindful investor here and understanding these market. I mean, this is why we're creating these videos. Again, we're just talking about what we would do, what we personally would do at the levels that we think are deemed necessary and respectful for ourselves. So, you know, it's at the end of the day, it's for you to pick up on these kind of things and see the way these markets are responding. But I think that's some really good points there. But now
this is the other one. And silver's the other one.
Yeah, silver, 100%. But this has been a jam-packed episode, Martin.
I hope people have enjoyed it.
Yeah, you know,
Actually, we haven't shown any charts, but next time we'll show some charts.
yeah, I think it was good though to have this conversation because there is a lot going on,
Yeah,
and I think showing charts might just overwhelm that a bit more than necessary. But yeah, no, we'll do another proper stock market breakdown, look at some levels and stuff like we do.
Yeah.
But I thought this one is a really nice summary episode of really understanding how everything links together, how everything is sort of all happening at once. So you know, we hope this has been insightful. You know, send me screenshots of your notes. I want to see the notes you've taken.
My notes?
No, not you. I was talking to the audience. I want to see. I want to see the audience's notes.
That's a very good idea. And maybe the audience also has. You know, please don't forget to share and like. But we want to try and create a good community. But it'll be interesting to see what other thoughts that, you know, and I've got to apologize. I forgot his name, but he did make a comment on Facebook, you know, about GameStop, right? So, and you know, because I think, you know, GameStop actually just shot up to 275, 285, you know, and it's come back down again. So I've got to apologize to him. If he was long, he did really well on that. But yeah, so the market is a two-way streak, but I don't know if the streak will stay on this side all the time, right? Exactly. So yeah, just be mindful of that.
Awesome, sounds good. Well, again, look, guys, you know, please like, subscribe, and even share this with one person. You know, if they would find it valuable, useful, if they're interested, even if it's NFTs. And if you guys if anybody's getting involved in NFTs, let us know. Drop us a message. We'd love to hear and know what you're doing.
And you can find out about, just simply Google NFTs. If you don't know anything, it will give you, there's so many articles.
Everything.
It will give you platforms as well.
Literally, yeah. I'll you know what I'll do? I'll link some good articles that I've seen in the description below, so you can have.
Let's sell Indies NFT on here.
Yeah, my brother.
I said to you, get Kiki to do a track.
We
can just put it on here. See if I'm interested in the track.
We're going to be looking into it. Don't you worry about that. Okay. So we're on the job already. But
I can be the backing group.
You can be the backing vocals. Yeah. We can use you on the album art as well. Yeah. No, but it's been fab. It's been really good. But again, you know, please do, you know, share this if you can, even with one person. It helps so much to grow the community. We want to be able to help and provide these insights and provide you with all the latest. You know, you can't ever say, you know, we're not talking about the hot topics, because we are. And if we miss anything, you let us know. But I guarantee,
and then we'll look into it for you and we'll create content.
Exactly.
But the other thing is interaction. You know, is with the algorithms that YouTube, unless you subscribe and like it and press the notification bell. But the other thing is also interactions with us, right?
Exactly.
Because that pushes up in the algorithms. Yeah, 100%. Come on, guys, we want to get to a certain amount, right?
100%. But no, again, so yeah, I hope this has been very, very, I mean, just for me, just talking, you know, just us two in between has been very insightful. So I'm 100% sure it has been for you. If you have any comments, if you have any questions, you know the drill, let us know in the comments below, or you can email us. It will come up here at info@infinitywealth.me, and we'll get back to you, or definitely we'll answer the question on our next Q&A video that we will do, which will be coming up shortly, because we've got quite a few questions in the last couple of weeks that we've got listed. So yeah, apart from that, I think that's everything. Cool.
Yeah, I think we've covered a lot. Yeah, it's
sounds good.
Yeah,
sounds good. So until next time, guys, take care.
See you later. Bye, guys. See you next time.